Good morning, everybody. It is the 8th of January. It's Friday, it's frosty outside, and it's non-farm payrolls today. Hope everyone's well. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, guys.
Morning, all.
Good morning.
Yeah, we're due snow today.
Are you now? Have you not had
Yeah.
any yet?
No, it's
I
supposed to
haven't even
come
got
overnight,
frost.
but nothing.
Where's my frost? I don't think I get frost because I have the heating on full at the moment, so it
And the kids have the
creates
windows
a
open.
bubble.
Yeah.
Yeah,
It's a
stops
bit
all the cold.
Is that for the
frosty
whole of
and
Whittam?
foggy.
Yeah, I think I heat the whole of Whittam, to be honest.
Very kind, very kind.
Excellent. Okay. Right, so on to the news from overnight. The big news on the headlines that I've seen this morning. There was a video from President Trump overnight condemning the storming of the Capitol, which occurred after he used his angry supporters to take action. But he also then said he would prepare the administration for a peaceful transfer of power to President-elect Joe Biden, who of course was sworn in yesterday as well. So looks like that's all going to go smoothly. I mean, there's 12 days to go, so anything could happen when Trump's in charge. So let's
Talking
not
about trying to get him out early, aren't they? They've asked Mike Pence to look into ousting him. He's invoking the 25th Amendment.
Has Pence turned on him now? Then has he?
He's not reacted yet.
Right.
He hasn't responded.
And just off air, Ian was talking about something he saw in the headlines about Trump pardoning himself and his team on his last day. You got any more details on that?
Well, no. It just says, along with a sweeping list of individuals. But if he's got to pardon himself, then he's basically admitting guilt as well, isn't he?
Yeah, absolutely.
But yeah, it's just bizarre.
I see that
Certainly is.
after the events of the storming of the Capitol, the Mexicans have offered to pay for the wall now, and the Canadians have asked for one as well.
Like that.
Fantastic.
I see we've got mandatory tests for anybody travelling now, haven't we, in the UK?
Yeah. So that will further put people off. So you have to have taken the test within 72 hours of starting your journey. And if you don't, you'll be fined 500 quid.
So
Is that coming? Is that just coming in or going out?
No, anywhere, I think. I think both ways, is it? There are obviously a few exemptions.
Lad of mine's, mate of mine's lad is supposed to be travelling on Saturday, but that's not going to happen.
Well, and he's got to take a test 72 hours before he travels, and then.
Yeah, well, I don't think he's taken one, so yeah, he's not travelling, is he?
Oh, okay, yeah.
Aside from that, it's a big day of data. We're waiting for quite a lot of economic data showing the impact of the coronavirus wave in the developed economies. A lot of economists are forecasting the lowest amount of jobs created since last April. So that potentially could be a bit of a catalyst and a bit more of a reality check, I guess, about what's going on with markets at the moment, because clearly there's a lot of appetite for risk. It needs a bit of a washout, doesn't it? I mean, it's just, how can it be sustainable? How can we have gone through this global pandemic and the markets be where they are? It doesn't make an awful lot of sense, does it? It's just been obviously driven by
funny money,
speculators and funny money, as you say. Okay, so let's have a look at some charts then. I mean, let's have a look at what happened with. Should we look at commodities first, because there's been quite a substantial move in silver and gold this morning. Are you across those, Steve?
Yes, we can sort of see this from yesterday, and obviously we'll start with a weekly chart and break it down in the time frame. Weekly chart looks very sick indeed. We've been talking about this all week, about this sort of potential for a correction in gold, and that's forming a shooting star candle. So that's a negative candle if we close around these sort of prices on Friday. On the daily chart, obviously we got forewarning of this with the bearish outside candle on the 6th, and we held in on the 7th, and today overnight in the last couple of hours we've broken below the 1900 psychological level, and we can see it here from yesterday's fantastic trade idea from the Steve O'Hare, and this flag formation that we've sort of like picked up on. I think I drew that after we sort of formed these two sort of support lines, and it looked quite nice. I thought a break of that would be extending lower, and it seems to have done that. So where to next on the gold? Well, really, the next level.
Was there any catalyst for the move that you've seen on the news wise?
No, you know what? I didn't. I saw it in the hour. I didn't check it. I thought it may be quite a technical move because of the $1,900 level. So, and I wouldn't be surprised if it is just technical.
It's weird how it's moving with stocks as well now.
Yeah,
and also, and all the risk currencies are all coming off this morning, and gold's going lower.
Yeah. Again, it's sort of like you wonder whether it's just people sort of, if they have to sort of like get out there, just liquidate some sort of positions if stocks prices come off, and maybe they've got to liquidate gold positions as well, just to sort of fund the stock positions or whatever, to stay in some of the stock positions. But $1,900 was a significant barrier on the way on the correction back up from the swing low of 1856, around that level. And then we sort of got back up here, and once we broke above it, it did really well. And then we had a spike down and reversion higher, and it's finally broken that. So I think that could just be a technical selling from the 1900 psychological level. So we've broken through the Ichimoku cloud on the hourly chart, so that will act as a bit of resistance over the coming hours. So if we can't get back above $1,900, if anything, I would be looking to sell a rally back to there with a tight stop just above. Silver had a bit of a similar type of move. Probably the real support level was coming in between 2658 and 2675. We broke the 2658 level, and we saw this extended spike lower. Again, for this, we probably paused at the right sort of level, 2592, which was previous swing low, and we're edging back above the Ichimoku cloud. So could be just a washout and back on it, but I'd definitely be negative until we broke back above this 2675 level. Crude oil picking up again, still continuing the move higher. As we said, if we go back even to this sort of like hourly flag, it seems to be grinding its way up towards $52. But it's more the weekly chart that we were looking at before, where we think this $67, $68 is more of a targeted move over the more medium term. Indices quickly. As we see on here, this weekly chart again looking positive, but obviously over the last couple of hours we've had a little bit of a turnaround, but nothing really to be too worried about. I don't think everything seems to be dip buying still. That's DAX, FTSE. These are only hourly charts, but they've got plenty of support below. And we've just made a new all-time high in the Dow. The Nasdaq made a new all-time high in the last hour, 13,000. It's quite a psychological level. Could that be pivotal? I don't know. But yeah, I know we've got non-farm coming out and things like that, but non-farm always tends to be a blip anyway. Even if we do get a sell-off on the back of it, we'll soon sort of recover that over the coming days, and it'll be negated. Unless there's some huge extreme number that's coming out that no one's expecting, but I think we're all expecting a pretty poor number.
Civil war in the US might do it.
Yeah, I mean that could trigger something.
I wouldn't pin you out on it because we've thrown everything at the market over the last couple of years and it doesn't budge, does it?
True.
So,
yeah. It's world peace that we should be worried about. World peace and sort of, and then everything starts to unravel.
World peace will be a bad thing for the markets, do you think?
Yeah, absolutely. Yeah. World peace, the whole market, the markets will collapse across the globe.
Doesn't want any good news.
It's all inflated on rhetoric and hearsay. So if there's none of that, then maybe we'll get everything sort of like going to their actual value of zero. Who knows?
All right, is that it from you, Steve?
Yeah, that's it.
Fantastic, thanks, mate.
Cheers, Steve.
Okay, Ian, want to run us through some FX stuff? Yeah,
back to the dollar as always. Sort of moved higher off this butterfly pattern. A bit confused at the moment, for a change. got this here. This is the hourly chart. Let's just refresh that so it looks a bit nicer. In fact, I'll make it a 2-hour chart. So these got obviously quite important fibs on the way up. If you breach the 78.6% retracement level, then it has a tendency to push through. However, we have reacted lower from there this morning, and I think this, at least in the short term, offers quite a good buying opportunity. But the buying opportunity is really down here. You want to be getting in around about 78.6 or 88.6 of this rally. So basically that rally up, then the dip down to here near this previous swing low probably, which is 89.41, and then a push up to this level. So even if it holds, then dip buying looks quite good. If it breaks, then it could run higher. But dip buying, and I think then it's just going to be an A, B, C, D correction in this dollar move. So in other words, 1, 2, 3, up to this 90, 70 area, and then that would form a butterfly formation, and then drop it to the downside. And if you go to this chart, which is a monthly chart, that shows quite a decent or clear breakout now of that channel formation. So that should really be an ABCD pattern lower. And if you put this on here, 90.70, it's virtually a Marabuzzo level from December's price action. And you've also got these sort of spike lows and spike highs that I think could basically attract selling interest. So what I'm trying to get at, I suppose, is that expecting choppy price action, especially on non-farm payroll day. If we do get dips, then they're worth buying into, and if we get rallies up here, they're worth selling into. So again, I think choppy price action. Ploppy, that used to be my nickname in the markets, but we won't go there. Because my fascinating skin diseases, and we won't go there either.
Oh, nice.
No, I used to have a bit of eczema on my face. So anyway, too much detail for this early in the morning. So reflecting that back onto euro dollar. So if you do get a dip up or a correction higher, so we've got this wedge breakout. So you get a correction higher, then you've got reverse trend line resistance here. So I think you don't really need to be focusing on euro dollar. I think you need to be focusing on the dollar index. I think it's all going to be driven by the dollar today. So this would be your first resistance level.
Any interest in on the gap on euro dollar?
Whereabouts?
What? Gap? You can't have a gap in euro dollar. Oh my god.
Where?
Look at the hourly.
29th of December. 28th and 29th of December.
Yeah, to the left. Left.
What, here?
Left. Yeah.
Oh, close. Yeah, that's what I mean. I think you're going to move higher from here off that 78.6% fib on the dollar index. But I think this reverse trend line looks quite good, or a potential head and shoulders here. So left shoulder, head, right shoulder. We've really not, apart from this wedge formation, we've not really made a topping pattern, have we? So I think it's a bit too early to call a top. And I think selling into rallies today, or even buying this dip to sell into rallies, if you know what I mean, could be the call. But so I think you're going to continue to have pretty choppy price action. This I thought was quite interesting. I'm getting off FX for a minute.
How dare you?
I know. This here, which was you got a cipher pattern up here. You got a wedge formation, which looks like it's just breaking out at the moment. But again,
the red arrow adds some serious conviction, in my opinion.
It's a big red arrow, that. But I'm just wondering if this is going to be a proper wedge breakout or not. You got a bit of divergence up there, and if you go to risk crosses, what's a yen IE? You've got, and this is weekly chart, you've got a 261.8% fib here at 80.58. We're currently trading 80.72, so just above it. And then this shorter time frame, we've got outside bars on the 1 hour chart, and then I think it's a 2 hour chart. You've got potential of a evening doji star here. So again, I think you're probably going to consolidate into non-farm payroll, and then it's all going to be about non-farm payroll. If it's a shit number, then I think this could come lower. If it's a half decent number, then I think that the Wall Street could push up to that confluence zone a bit higher up. So I think basically it's just going to be choppy price action. I think if anything, I'll be looking at selling yen crosses today. So that was a medium-term resistance on Aussie yen. You got this is an 8-hour chart. You got 161.8% fib here on euro yen, and it's shown a decent outside candle again. But like I said, I think it's all going to be about non-farm really today, obviously.
Yeah.
And and if Trump does anything stupid,
that can never be ruled out, can it?
No. So that's me done.
Thank you, Ian. Let's get on to the guns to the head from yesterday. We managed a couple of wins, which is good. So they could have been better wins if we'd held them past our expiries at 9 p.m, but that's the game. We close them off at 9 p.m. each day, give them about 12 hours to run. So we had a long on sterling Swiss, which made 15 ticks at the close, 0.32R. Steve was the best performer of the day with a 1.13R return on gold. As we've seen this morning, that would have well and truly smashed his target on the downside if he'd held on. And we had a long on sterling Oz, which started off quite well, but then just fizzled out, didn't it? It didn't kick on, unfortunately.
Yeah, it's
yeah. So overall, we made some money.
Dip lower in the close, didn't it?
Yeah. So we made some money. That's 2 days on the bounce. It's certainly nothing, no game changing overall, but maybe stopping the rot and consolidating a bit here before we start rocking and rolling again. Picking some good winners. So who's got one today?
Yep, I'll go on.
Go on, Im.
Looking at the dollar, and I'm going to side with Ian today. Looking at the daily chart, we formed a morning doji star formation on the daily chart, and we've broken above the weekly high, basically $89, well, $90. Not $90, 90 the number. On the 4-hour chart, we can see we've triggered a buy signal on the Ichimoku cloud if you're trading an Ichimoku cloud strategy, and that's picked up quite nicely. And it's also in positive territory on the Ichimoku cloud on the hourly chart. And the hourly chart almost looks a little bit reverse head and shoulders type formation. But with the significant level we've broken above is the last day of the year, that high 89.97.5. So for me, that's positive. I'm looking to buy the dollar at market 90.06. The stop on it, I'll have a stop below 89.76, and we'll have a target of 91.26. Is that a ridiculous target? Yeah, that is a bit ridiculous. Ridiculous. Let's be more realistic. 90.96. That's my trade idea for today.
Thanks, mate.
Dollar index.
Ian, I can see you got one ready. What are you going with?
Yeah, it keeps on moving. Bloody markets. I'm just going to go for a short term. I'm going to try and get some R before non-farm payroll. And I do like these outside bars on euro yen. Got a confluence zone here at 126.76. So I think what might happen is we might hit this, move up, and then move down over the longer term. So I'm going to go for a short here at 127.06, targeting 126.77 with a tiny stop of 12 ticks at 127.18 to give me 2.4R.
Perfect. That would do very nicely. I'm going to take the opposite side to Steve and look at euro dollar. I just touched upon potential gap being closed today. This is from the 31st of December. Possibly a bit of a wedge forming here. Obviously, it would need to break out to confirm that. But I think there's decent risk reward buying here at this support. So we're currently at 122.23, going with a very tight stop loss at 122.00, and I'm going to target a move back up to close to these recent highs at 23.40, which would be 5.2R if it pays out from here. Yeah, so hopefully one of us gets a decent win out of a dollar-based trade today. So there's the 3 trades. Moving on to what we can expect today. Obviously, we've talked about non-farm payrolls being the headline figure, which is due out at 1:30. Is there anything else you've got on the economic calendar, Ian, that we should be keeping an eye out for?
Canadian unemployment's out the same day and the same time, isn't it?
Yes, normally.
No, apart from that, it's all a bit. There's no speakers to really be worried about. Clarida.
We've got some UK figures out at 9 o'clock, unit labour costs, but that's not a big figure. Unemployment rate out from the EU at 10, and that's it really until the 1:30.
Excellent. Okay, well, I guess we can round it out there then. Have a successful trading day if you're getting involved today with non-farm payrolls, and have a great weekend. Hope you've had a good trading week, and we'll be back on Monday for more of the same.
Cheers.
Indeed. Have a good one.
Have a good one. Bye-bye.
Cheers.
Bye.
Bye.